This is the Friday, December 19th, 2014 version of the Market Plus segment. Joining us now is Darin Newsom. Darin, welcome back.
Thank you, Mike.
Now, we've got a lot of questions here from our Twitter and Facebook followers, and I was just thinking we'd start right in with the corn market.
Okay.
We've got a question here from Phil in Ontario, Canada. Is the $5 mark in DEES 15 corn futures likely within the next 8 months, minus a major production issue?
Minus that last bit is probably going to be the key. Because right now we're talking about, or everyone's talking about, these reduced acres that we're going to see in the U.S. when we get to spring planting 2015. And so let's say we have normalized, just no weather problems whatsoever, and we have fewer acres. Could we see the DEES 2015 corn contract get to 5? Maybe an outside shot. But what I think has a better chance of happening is that there's going to be some short-term weather scare. Maybe it's during planting season, too wet, or we get into a dry situation during growing season that we could almost call, if nothing else, just a minor weather situation. That's when I think we go back above. We hit the 5. We maybe climb above. At my annual DTN Ag Summit Outlook presentation, I talked about the 15-16 market getting back up and testing the April 2014 high of 520. I think it's a legitimate target. Will it do it here at the end of 15, or will it carry over into 16? Hard to tell right now, but I think the December 15 contract has a shot at 5.
Now, and our analysts have talked a lot about reduced corn acres. I've talked a lot about reduced corn acres this upcoming year, and a lot of that was predicated on the transportation issues that the growers up in the northern parts of the expanded Corn Belt have been seeing over the past 2 years. And now with the action we've seen in crude coming down to that $55 level, is that going to continue? Let's address that first. Crude stabilizing, do you think?
I'm kind of in the minority here in that I think we may have put our low in the crude oil market this month. Looking at a monthly chart, it dropped all the way back, tested some long-term support right around 52. I think we got into the $53, $54 range, and immediately spiked back up. Now, a spike like that means we'll probably drift back down, and we've actually seen it trim some of that rally. So I think we hang in this area. I don't know that we're going to continue to go down. I think it is going to start to stabilize. Now, as far as the transportation issue, because crude oil is so low priced, what we're hearing right now, there's not as big a rush to move all this crude oil around, and that is freeing up some trains to move other commodities in the northern plains. So I think that is going to help us move, some of the wheat, some of the corn, some of the other things that's been trapped up there, and I think we're going to see better transportation system in 2015.
And with a better transportation system, presumably a better basis, and therefore an inducement to plant to corn again this next year? Could we lose or gain back those planned reduced acres?
I think it's possible. I mean, if we look at the Nov bean DEES corn ratio spread, it still favors beans, but it's trending down. I mean, it's coming back in corn's favor. So I know we're at the beginning of this time frame between DEES and Feb, roughly in that time frame when everyone's going to make their decision. I'm not convinced that we are going to see the huge reduction in corn acres that's been talked about right now, or the huge increase in soybean acres. I think it's a possibility, but I'm not convinced that we're at that point yet. I think the market still has a lot to say about this over the coming months.
All right. Now, with that being said, we didn't get a chance to discuss new crop bean marketing on the show, with the idea that we might not see such a reduced corn acreage. Do you make plans to sell your Nov beans in the nearby, or do you go ahead and wait for a weather scare this summer?
I'm not going to sit back as much on the new crop beans as I might some other markets. If we see a decent rally, and let's say we get, let's say they ride the old crop market higher through the winter into the South American harvest, and we start to see some big numbers there, I think we're going to be willing to pull the trigger. We need to be willing to pull the trigger on some U.S. beans. More than likely, we're going to see some increase in soybean acres in 2015. And given the fact that we did produce a record crop in 2014, we're looking at a huge crop from South America in 2015. There could be some pressure really start to build on beans. But the underlying theme here is that global demand is going to continue to go up. we just can't seem to produce enough beans globally to really crush this market. So while all the statistics would say soybeans should collapse in 2015, I don't know that global demand is going to allow it to happen, regardless of how many more acres that we plant. Could keep the rally in check, could push the market down, but I don't know that it's going to collapse.
Not going to see $8 beans.
No, I made a comment talking about how the statistics would indicate sub $6 soybeans. It got a lot of attention. Number one, it's not. I don't think it will happen. I don't think it can happen, given the type of demand situation we're talking globally. Could it pull back into the low nines? Yeah. Could it break back below that? It brings into doubt, then it brings into question then this whole idea that I have that the long-term trend in beans has turned and is going to go up. So a couple different things at play here. I don't know that it's going to collapse for that reason. I think there's going to be something come up to help provide support.
All right. Now on the show when we were talking cattle, you mentioned that that we could see this market, fat cattle, continue to pull down and feeders as well resume their decline. And Nyla and Virgil in Newkirk, Oklahoma from Facebook have a question. How much more free fall could there be? And let's talk fat cattle first.
Fat cattle, the cattle market, the cattle complex as a whole could be limited to how much further it sells off, but it looks like we've got the markets on the run in here. Much will have to do, a great deal of this is going to have to do with what do the cash markets do? Because unlike, as we've said many, many times, unlike the grain markets, livestock markets are driven by cash. Grain markets usually driven by the futures. Cash follows the futures. So what we've got here is a cash market that's really started to sag, and only if it continues to sag through the year, the end of the year, I think that's where we'll see the live cattle futures market continue to come down. I think it's something that could happen. Feeders, as we talked about on the show, while I am projecting them coming back down into the low twos, there is still this cash support to the market that may not allow that to happen. So coming into this weekend, yeah, I think we're going to continue to see pressure in both markets. I think they could both pull back, a ways further here over the next few weeks. But beyond that, I think the cash market's going to step back in, demand's going to come back, and we're going to start pushing this thing higher.
So dollar-wise, I mean, fat cattle, we could probably look at that 150 as maybe a bottom, and feeders, you'd mentioned low twos.
As always, I have a hard time remembering where I've got my lines on all these different charts.
Sure.
But yeah, I would say that that's realistic. Yeah, I think we could pull back that far.
Okay. All right. Now, before we let you go, we got a question here from Jeremy in Lanark, Illinois. And Jeremy submitted this question on Twitter. And as I mentioned on the show, you can reach us on Twitter at #IPTV Market. It's our Twitter home now. Also at Market to Market on Twitter. But Jeremy's question is, and I think it's an intriguing one, with the dollar improving, shouldn't imported fertilizer become cheaper?
Logically, you would think, oh, yes, but the fertilizer market as a whole, I think is going to stay pretty well supported by the idea that we're just getting ready to go into planting season next spring. And there's going to be this fight over acres. And if we don't see the corn, the shift away from corn acres that's being talked about this winter, then we're going to have some fertilizer to put on those corn acres, and that's not going to allow the market to go down much, regardless of what the dollar does. So I think here over the winter, there may be some buying opportunities, some contracting opportunities in the fertilizer market, but I don't foresee it crashing right now. It's tied to the energy markets, and if crude oil does start to gain its feet again, find its legs, maybe that's another thing that the fertilizer industry can point to and say, look, our costs are going to start going back up again. We don't really want to bring the fertilizer prices down as much as what some of the other markets have seen.
Now, if the reduction in corn acres does appear to be happening, that could have a bigger impact than the dollar.
Right. I would say that's what it's really going to be tied to, and that could keep the fertilizer market from going up a great deal. I don't know that it's going to come down a great deal from where we already are. But if we don't have the corn acres, I don't know that we're going to go up as much as we might as if we don't see a terrible sentence, I apologize for that, if we don't see the huge shift away from corn to soybeans.
Yeah, it's hard to talk about a reduction in acres and going away.
I don't know how many negatives I had in that one sentence, but my old English teachers are probably cringing at this point.
So the hot tip from Darin Newsom today is if you're a producer worried about fertilizer costs, tell your salesman you're planting all beans. And if we all do that, then we can spring it on them at the very...
Fertilizer probably won't be that expensive.
Yeah. Okay. Well, with that, Darin, we're going to let you go and hope you have a wonderful holiday season.
Well, thank you, Mike. Same to you.
And thanks to all of you who have submitted questions via Facebook and Twitter. As I mentioned on the show and here, and we're going to keep mentioning it, find us at hashtag IPTVMarket on Twitter or find us on Facebook at our Market to Market page. We want to wish all of you a happy holiday season, and we will be on next week. It will be after Christmas. So enjoy the holidays, and thank you for watching. Have a great week.